Welcome back, my fellow investors. Today, let's break down some essential stock market terms that every beginner should know. Trust me, it's not as complicated as it seems. Let's start with the basics. Stocks or shares. Think of a stock as your ticket to becoming a part owner of a company. Yes, you heard that right. When you buy a share of Apple, for example, you literally own a tiny piece of the tech giant. As the company grows and becomes more successful, your piece of the pie could become more valuable. Now here's something exciting. Dividends. Imagine you're a landlord collecting rent, but instead of property, you own stocks. Some companies share their profits with shareholders through dividends. It's like getting a thank you note in the form of cash or additional shares just for being an investor. Pretty sweet, right? Ever heard people talk about bull and bear markets? Here's a simple way to remember. Bulls attack by charging upward with their horns, while bears swipe downward with their paws. So a bull market means prices are climbing up. Everyone's optimistic and happy. A bear market? That's when prices are falling, and investors might feel a bit grumpy. Let's talk about ETFs. Think of them as a ready-made investment basket. Instead of buying individual stocks like Amazon or Tesla, you can buy an ETF that contains pieces of many companies at once. It's like ordering a sample platter instead of betting everything on one dish. Here's an interesting one, IPO, or initial public offering. This is when a private company decides to go public, like when Facebook or Uber first hit the stock market. It's your chance to get in early, kind of like being one of the first customers at a hot new restaurant. Market capitalization, or market cap, is basically a company's price tag. It's calculated by multiplying the stock price by the total number of shares. This helps you understand if you're dealing with a corporate giant like Microsoft, large cap, or a smaller growing company, small cap. Finally, there's the PE ratio, which is like a speed check for stock prices. It compares a company's stock price to its earnings. Think of it as asking, am I paying a fair price for this stock? A high PE might mean the stock is expensive, while a low PE could signal a bargain. Remember, understanding these terms is your first step toward becoming a confident investor. The stock market might seem like a maze at first, but once you know the language, it becomes much easier to navigate.